Every great trader knows how trends move and the importance of trends. Being able to identify a trend has made them lots of money, while people who do not respect trends and do not know how trends move have lost lots of money trading. So in this video, I will teach you the importance of trends, why trend is your friend, the different type of trends, and how to spot a trend forming or how to spot a potential break of structure forming. Without further ado, let's get started. All right, boys, we're on the charts. So why is trends so important? Well, let's give you a daily example to start off. So today, when I was looking at the markets, I was trying to form a bias. Where do I think the market's going to move? Because when you're placing a trade, you usually have like a 15 to 30 minute window before it closes. And you need the trend to be in your favor, or you might get stopped out, or the market just might move sideways, and you might not make any money at all. So we need to identify a trend. It's very important. Market has moved upwards today. So before I came into this day, I formed a bias. I was looking at the trend of yesterday. As you can see, moved upwards. I decided, okay, let me look at the trend of the monthly. It's moving sideways, so there's not much to get from this. So I decided to go back down to the weekly. And when I went to the weekly, I noticed, wow, we are moving upwards. This is not including today. We are moving upwards. So I finally decided to check pre-market, and my bias was confirmed yet again. So I decided, okay, it's going to be bullish. And because of that, I was able to place a trade and make profit on a paper trade. I'm still learning actual trading. I'm going to pass a funded test. But by using my bias, I was able to get into there, simply just use the building blocks I will teach you guys later, and just make it easy trade, just because I knew the trend and the direction the market was moving. So boys, this is why trends are so important. If you don't know the trend of the market, if you don't know where the market is gonna move, how to identify trends, dojis, the candlesticks that I talked about, how to see a potential sideways move, then you will just remain stuck. Without further ado, let me stop yapping and let's get to this. All right, I'm gonna exit out real quick, and we're going to identify different types of trends, okay? Let's start with the bearish trend. So, boys, a bearish trend is really just 3 candlestick moves downwards. I'll show you guys on the chart after, but sort of like that. As you can see, market is just moving downwards. Bearish trends are not necessarily good or bad. It really depends on your bias of the day. If we have a bullish bias and we marry our bias, which means we're only trading our bias. Even if we see a bearish trend, we're not gonna take a trade. We're just gonna stick to that. It can be bad, or it could show like a potential retracement, which means the market wants to move lower so it can move higher. We talked about in previous videos, lower lows, higher highs. Sometimes the market wants to retrace downwards so it can get more liquidity at that sweep right there to move higher. So bearish trends, very important to know. You guys probably can identify them pretty easily. So a trend, as I mentioned, is 3 candlesticks downwards. So we can see, boom, trend. It's a pretty obvious trend. This was the 23rd, boom, downwards. Moves up a little bit, and the trend goes sideways right here. So the trend is broken around here, but the market decides, okay, want to move downwards more. Huge drop. This is the next day. And then trend stops. So as you can see, bearish trend. Another bearish trend right here. And the reason why the trend continues is because there's no real break of structure. There's not enough liquidity challenging the downwards move. So boys, that is I cannot find it. Where's that at? Fuck. All right, I lost it. But that is a bearish trend. Let's get on to the bullish trend now. So bullish trend, probably expecting this. Quite literally just the opposite. I do not know what's going on with that. That's weird. Huh. Oh my god. Wonder why it's doing that, huh? Well, I'm trying to, okay, there we go. All right, it's back now. That was weird. That was weird. But bullish trend, simply just same thing as bearish. Moves upwards. Let me add one more actually. Moves upwards. And as you can see, just like bearish, it's characterized by higher highs. So let's grab horizontal line. This is a high right here. And then what is followed by it? Well, of course, another high, and another high. And it is characterized by higher lows, okay? So we got a low right here, a higher low right here, and another higher low. So bearish, bullish trends, basically just the same thing, just in different directions. So bullish trend characterized by higher highs, higher lows. Bearish trend characterized by lower highs, lower lows. Very simple, very easy to understand. Now, we're going to teach you one that you need to know and something you probably should honestly just avoid trading if you see it. So this is, ignore that. This is a sideways trend. So sideways trends, just like dojis when I talked about candlesticks, really are just market indecision. So when you see a sideways trend, just don't take a trade off of it, simply because we can't tell if the market's going to move up or downwards. Now you can use your bias, sure, but the price action is choppy. And as I mentioned earlier, we have 15 through 30 minutes if we're going to take a trade usually. I mean, obviously you can use options and just like predict how's it going to move for the next like 2 hours, you know, but we want to trade like 15 through 30 minute trades. You know, we want to have like quick, good trades that actually make sense. So sideways trends, you know, real quick, let me just show you how a long or short position usually looks. So long position, I don't know why I can't place it. Let me see. Oh. But anyways, long positions and short positions are like very small. TradingView is screwing me today. I don't know what's going on. But long positions, I'm a GDP. That's why. Okay, I see. Yeah, this is from earlier. So there we go. All right, as you can see, long positions, short positions, they're usually pretty big. And the reason why they come like big like this, it's just due to the fact that market can move so fast upwards or downwards. And for that reason, we want to have a lot of space between the stop and the take profit. And for that reason, sideways price action is choppy because sure, you might get a small profit, but you could also get stopped out for nothing. And that just really doesn't make it worth it. And also at that point, you're basically just gambling because sideways trends, as I mentioned, are defined by indecision. You might get in at the right time where it moves up and boom, but you might also get in just before a big move downwards and get stopped out and lose a bunch of money. So this ties back into trend is your friend. If you cannot see a bullish or bearish trend forming, then just don't trade it, bro. It's that simple. Now let's go look at a sideways trend real quick. Oh my God, this is terrible. Let me go to 1 day actually, so it's more recent. Oh, this is like all the way down here. We have to go all the way up. Yep. All right. I don't know why it's 1 minute. It's turning to 15. There we go. All right. So let's zoom in. Okay, perfect. Right here. Yep. This price action right here, and this was for like a whole day. Actually, this was during the night. Yeah. Let's find a daily one. Daily one for you boys. Probably had some today, honestly. Yeah, right here. This price action right here is absolute dog shit. Okay, that's during, okay. Bro, honestly, these past couple of days have had good price action. It's hard to find them. Right here, this is perfect. This is perfect, okay. This price action is totally shit. There's a order block zone right here. And as you can see, price is not moving upwards or downwards. So you would probably just place the trade and like make like $2 or lose like 50. This we should never trade because it's not easy. It's improbable that we're going to have consistent profits based off of this. And for trading, obviously, we want to make profit and we want to make our time worth it. Now, if you want to sit here and scalp for like $20 for an hour or 2 hours, be my guest. But at that point, bro, just work a minimum wage job. Like it's not worth it. So do not trade sideways trends most of the time. I mean, if you see and like if your confluences all line up, you know, maybe there's a fair value gap that's broken, maybe liquidity is swept and it's in a sideways trend, and there's a break of structure, order block zone, you know, fair, like all that. You can, but it still might not be worth it, because it's just so hard to get in on the right time. That's the thing. You know, like sideways trends, you can get onto big moves once they break out of it, but it's so hard to get the timing right. That's why I don't think it's worth it. Because sometimes a sideways trend might happen for 5 minutes, and then sometimes it might happen for an hour. So there's no basically universal sideways trend. It's always different is what I'm trying to say. All right, so break of structure. How do we notice potential break of structures? Well, a good one would be we look for liquidity sweeps. So a liquidity sweep is essentially a wick. Let's delete this. Oh, a liquidity draw. Okay, this is a good one right here. It's already been swept, but as we can see, market was in a downwards trend, and liquidity was swept right here. Because of that, that led to a break of structure, since market had a bunch of resting orders right there, and those were filled. We're gonna go into liquidity later. Liquidity is a little bit confusing, so I will walk you guys through that. But that led to the break of structure. So liquidity sweeps, fair value gaps being filled, lower time frame, indecision, all of those can lead to potential break of structures. Now, am I saying that you should predict the break of structure? No. I think that you should wait till the break of structure occurs and then get into a trade based off of that. That's what I do, at least. I wait for a liquidity sweep, then I wait for a break of structure, and then I wait for fair value gap, order block, or break of structure, liquidity sweep, and equilibrium order block. That's what I trade, because I like to have more confluences and wait for it to be the most probable versus just going in based off of maybe 1 or 2 confluences. All right, then, let me think. Is there anything else I should talk about? I touched on this briefly earlier. High time frames hold higher powers for the trend. So if you see a 1 minute reversal, don't like full port based off of that, bro. Look at the monthly, look at the daily, look off the weekly, look off the 5 day, look off the 1 day, look off the 4 hour, look off the 1 hour, and then start to give some mind to the 1 minute, but also recognize that, hey, if the 5 minute is going downwards, maybe I shouldn't trust this 1 minute. And I think that's it, y'all. So I hope this video helps. I'm really enjoying making this series. Tomorrow we're going to be... Tomorrow... Should I do liquidity? Yeah, tomorrow we'll go over liquidity. Yep. So tomorrow we're gonna be going over liquidity. If you guys need any more help with trends, identifying them, just let me know. I can make it part 2. But I think it's a fairly simple concept, just like candlesticks. And I think you guys are smart people, so you guys will get it. Hope this video helps y'all. Have a good one.